Well, we definitely want to get into our next topic, and that is Tesla going to 10K. Part of this, when you look at Tesla, all right, and
the bear case, Tesla only goes to 10K.
We're going to use the 10K number. We may have to move that to 100K or maybe higher.
Yeah.
We'll see. But let's play with this. I was a Tesla bear at one time. About 5 years ago, I got a chance to drive the Model S. It was going to be, I've driven Mercedes and BMW all my life, and all my professional life when I could actually afford a car like that. And I went out and drove the Model S 5 years ago. So 2015 really was the year that I was driving the Model S. And at that time I was like, I'm just not, this doesn't do it for me. The car's just not there yet. And it had some autopilot capabilities at that time. Obviously full self-driving wasn't even in play. But really moving on to where I am now, and just this last year I purchased a Model Y, and I've been completely conformed, or I've seen the light, so to speak. So I want to hear your case on, and I've looked at some of your videos around the robo-taxi potential and really what that means for Tesla, because that's a big play. Potentially it's the bigger play. Talk to me about that and how Tesla can actually move to an unreal valuation.
Sure, so I have two different basic models. So since you brought it up, we'll do the other model relates to batteries.
Okay.
But let's start with the robo-taxi model. It's really simple. This is actually really simple numbers. If you watch the Autonomy Day presentation, Elon said, sort of as a side note, we're gonna have a Tesla-owned robo-taxi fleet of 10 million vehicles. He also, not at the same time, he said each robo-taxi will make $30,000 in profit a year. Okay, and I think that was $30,000 in profit for individuals who own the vehicle and run it as a robo-taxi, not the Tesla-owned robo-taxi fleet. But let's go with these numbers. You've got 10 million vehicles making $30,000 in profit a year. And I want to be clear, I think these are both understatements of where it's going, okay? But 10 million vehicles making $30,000 in profit a year is $300 billion in profit a year. Now, call that 2030. Let's say we're in the year 2030. And let's say you have a price earnings ratio of 30, which is massively low compared to a company that's growing as fast.
Yeah, innovation,
and we're leaving out all revenue from Tesla, all profits from Tesla Energy. We're leaving out all profits from selling cars. It's just, and they're supposedly at this point making 20 million vehicles a year, right? A price earnings ratio of 30, that's a $9 trillion market cap. It's a $9,000 share price without everything else.
Yeah.
Just that is a $9 trillion market cap and a $9,000 share price.
Right.
What would you pay today for a stock that's going to be worth $9,000 9 years from now? You would pay $2,000, $3,000, $4,000 for stock, and it's trading around $700 a share.
Yep.
And I think that is an understatement of the robo-taxi model, and it leaves out the battery revenue model, and it leaves out Tesla Energy, and it leaves out Dojo as a service. There's so much potential in Tesla for revenue.
Yeah, for sure. I did an analysis video on this very topic, but I was going more towards the delivery fleet as an opportunity because of the number of transactions that are occurred. We cover the restaurant space a lot and restaurant technology on our networks. And even with that one, which was a very conservative number, we were looking at about 100 billion a year in additional revenue, just basically, additional revenue beyond what they had, because obviously with a robo-taxi fleet, the vehicle, unless there's demand, and that is going to be interesting if we do replace Uber and all the different ride-hailing platforms out there with, say, a Tesla network, to get to that point, what is the capacity of what, transportation is and how will that work? All those kinds of things, I definitely would agree to a certain extent with that. If you have capacity of dealing with it, if you just look at the Uber model and what their capacity is right now, they're still only a very small market share, and that's mainly due to cost. Your theory is that Tesla gets down to, I think you had mentioned, around 10 cents a mile in terms of raw cost of what it's going to cost to basically operate the vehicle.
Cost per mile.
Cost per mile, 10 cents per mile, which would be absolutely destroy the marketplace in terms of ride hailing, because Uber's up in the $2 plus range.
So let me be clear about this. First of all, before I say this, I want to disclose, number one, I own a ridiculous amount of Tesla stock it's roughly 85% of my retirement portfolio is Tesla stock. Okay. And number two, I said I've only done one options transaction. I bought 2-year puts on Uber and Lyft. So when I say this, be aware, I make a lot of money if I'm correct about Uber and Lyft. Yeah. If people believe me and Uber and Lyft go down, then my option value goes up. I'm not planning on selling them. This is more like it's not a big position, but it's, I have a position and I have to disclose that. I believe that, so the Uber and Lyft, the size of the market for Uber and Lyft is very limited because the rough cost to the user is around $2.50 a mile. And I want to be clear about this too. I like Uber and Lyft. I think Uber and Lyft have made the world a better place. I think they have saved lives. They have reduced drunk driving deaths. I think that I've used it. I love it. I just recently rode Uber and Lyft when I was in New York City. I think both of them. So I am fans of the companies. I think they've done a good thing. I just don't think their business model survives. And the 10 cents a mile that I was talking about was the cost of operating, of the owner's cost per mile for the 2023 Tesla Compact that has not been fully revealed yet. The price per mile for the Tesla robotaxi network, I think when it first comes out, will probably be in the ballpark of $1.50 a mile, which will significantly undercut Uber and Lyft. I think it pretty quickly gets down to $1 a mile. There's this threshold when it gets down to around a price of around 70 cents a mile or 60 cents a mile. When it gets that low in price, the average American spends around 60 or 70 cents a mile on their own car that they own. And if you can get the price of a robotaxi ride consistently below the cost of ownership of the vehicle, you're going to start getting people to say, I don't want to bother owning a car anymore. I would rather ride on a robotaxi. And that's when the size of the market just scales like unbelievably. It reduces the profit per mile of the vehicle, right? Because you've lowered the price.
The volume goes up.
But the volume goes up insane. And so you go to $1.50 a mile, maybe you double the volume compared to Uber and Lyft, but you go to 70 cents a mile and you 50x the volume.
Right.
That's where the real money is in terms of, and that's where it's not 10 million vehicle fleet, it's a 50 million vehicle fleet.
Right. Yeah. And if there is a company that can get to it, that, when you look at what is happening with Tesla across the world right now, and also Elon's plan to build more gigafactories, that's going to be the limiting factor, so to speak, of whether or not they can get enough batteries on the ground. And by then, hopefully, the technology kind of moves in that direction.
Can I just address the battery point? Because you've mentioned this a couple times, the challenge of batteries. So batteries are absolutely a challenge for other companies. And this is the other model that I've been talking about with people that takes away from the robotaxi model for a second is, look, Elon and Drew Baglino and Tesla have said, this was in the slide deck, so this is like the whole company's, but there's one thing when Elon says something, you could say, oh, that's Elon time. Elon's just being overly optimistic. Right. But the whole company's on board with this mission. We're going to deliver 100 gigawatt hours of batteries produced in 2022, and we're going to deliver 3 terawatt hours of batteries produced in 2030. And that's supplemental to the batteries that are supplied by our partners, CATL, LG Chem, and Panasonic. So whenever I hear a bear say, there's a limit on how much Tesla can grow, and they're already overpriced or something, I just ask this simple question: how many batteries do you think Tesla will make in 2022, and how many will they buy from suppliers, and what's their total battery supply in 2022? Step one. So they've said 100 gigawatt hours. They said that's supplemental to their suppliers. So I would say they're going to do 250 gigawatt hours in 2022, but let's say it's 200 gigawatt hours. And now the next question is, what happens to those batteries? Well, they go in products and they sell the products. So you take from that, how much revenue do they earn per kilowatt hour on the batteries that they produce and buy from suppliers? And the ballpark number I come up with is around $600 a kilowatt hour. And the simple way of thinking about that is, and my models are always oversimplified. So the simple way of thinking about this, imagine a $30,000 Tesla Model 3 with a 50 kilowatt hour pack. The reality is it's a $36,000 Tesla Model 3 with a 54 kilowatt hour pack. So I'm actually undercutting the dollars per kilowatt hour. But that is sort of a rough, you can do the same thing with Model Y. I've gone through all the products they produce, and it's a good ballpark figure that it's $600 a kilowatt hour for their products, the revenue that they make when they have the batteries. So if you do 200 gigawatt hours of batteries at $600 a kilowatt hour, you get $120 billion in revenue in 2022, up from about $30 billion in revenue in 2020, or a 4x in 2 years increase in revenue. And you go out to 2030 and the numbers are and I think the dollars per kilowatt hour in terms of revenue will come down as you go out to 2030. And there's sort of a mix here because and by the way, Megapack, the Tesla grid storage product, that is significantly less. And that will be a large part of the 2030 story. And that is significantly less than the $600 a kilowatt hour revenue number. But Solar Roof and solar panels don't have kilowatt hours. There's no batteries in them. So those are just total bonus revenue on top of the kilowatt hours. So they're sort of offsetting things. But if you go out to 2030 and you figure a total of 6 terawatt hours and you drop it down to $500 a kilowatt hour in revenue, you're at $3 trillion in revenue. And that's not including robotaxi revenue.
Right.
So you got $3 trillion revenue on one side, and the margins on energy, this is actually what a model I haven't gone public with yet. I'm still working out the numbers. The margins on Tesla Energy, and we could talk, I don't know if you want to go there yet, the margins on Tesla Energy are insane. The margins on Megapack and Powerwall are absolutely insane.
Well, yeah, Powerwall is already showing to be a very interesting, but again, you're dealing back with a limitation on, currently, at least right now, on a limitation of being able to get to those units at any time type of scale. This software can go. I've listened to Sandy Munro talk about how far ahead they are in terms of chip manufacturing and also in terms of software. What are your thoughts in terms of the software being the differentiator for Tesla in the future?
Well, I think it's one of many differentiators, and I think maybe you're referring to the over-the-air updates. There's a whole bunch of things going in there, but the fact that...
And the new version, we're waiting on the new update, which is going to basically be the entire new refresh. I can't remember which version it is.
You mean FSD beta?
No, not FSD. It's a new operating system for the car that right now we're on 40. But it's a new update that's going to basically be a version jump. And that's what I'm really interested in, because Elon had been promising it at the beginning of this year. It hasn't occurred yet. Everybody's been looking for it. But I'm just kind of curious, when you look at the software capacity of what Tesla's engineers are doing, that's a big differentiator. The question is can they really move the needle between now and the time when the battery technology becomes more efficient to actually make these cars more efficient? They're doing it on all fronts. It seems like batteries, manufacturing prowess, and also software. Your thoughts on that?
So I guess there's different software issues. There's the software for the in-car experience, though, that you can play games in the car. There's software for making the car, how the car operates, which a lot of that is FSD, and a lot of that is the efficiencies of, using the car drives more efficiently, gets more range, uses more regen, corners better. I think all of that is improving in every way, and they're way ahead of everyone else. And I guess I would say you're sort of triggering something in me that I would hit on, which is I feel like all the other car companies are trying to make they're trying to catch up to the 2018 Model 3. And what any car company should do with software, hardware, with everything, is they should look at what did Elon say in the Sandy Munro interview that they're going to do for 2023, and let's try to do that.
Yeah.
Let's stop trying, because if you're able to deliver a 2018 Model 3 in 2023, well, you're 5 years behind and Tesla's accelerated. You're going to be 10 years behind in a couple of years. So, but software specific, I think they're just, to me, I think they're improving the software. It's getting better. I don't think that's the revolutionary change. That there's big changes in there, it's important. The revolutionary changes are manufacturing and FSD.
Manufacturing, yeah, for sure.